The stack is going to evolve in an analogous way, but that's crypto-centric. And let me explain what I mean by that. In the bank world, we have the Federal Reserve, we have regional banks, we have the retail banks, when we have layer two, which is Visa, PayPal, other service providers. Okay, and in the crypto world, we have the miners, we have nodes, we have people like exchanges, wallets / hardware wallets, and we are going to have layer two. Now, what's really interesting is as it comes to layer two, everybody talks about the crypto-centric layer two, but Visa, I think, is going to have a critical role to play in crypto layer two. Visa and MasterCard, but Visa is much further along. I wish American Express as an ABRA investor would get there. They're not quite there yet, but Visa has been most public about their role as it relates to layer two. And so what's going to happen is that you're going to have all of these kind of crypto-centric banking services, ABRA, BlockFi, and AsiaCrypto.com, that basically offer the ability to have a brokerage to manage your crypto wealth, the ability to borrow against your crypto, the ability to pay again, using that borrowing maybe so that you're actually not spending your Bitcoin. Maybe you actually borrow dollar shitcoins, pay, right? And your Bitcoin hasn't moved, right? Using Visa rails, which is super interesting. And one of the key aspects of why I think Visa is so interesting here is that they're no longer owned by the banks. Years ago, they were owned by their member banks, right? As a public entity, they don't report to anybody but their shareholders now. So outside the US, a crypto company can actually become a principal member of Visa now. And in theory, settle crypto transactions with retailers without ever touching the banks. So that's what I mean by it's now a viable layer two solution. So when you add all of this up, you end up with an analogous stack that actually doesn't require the traditional banks anymore, even to pay your bills in a way that doesn't force you to touch your Bitcoin. And that's what I want personally. I want to be able to pay my bills without a bank, without having to spend my Bitcoin. And it's probably going to be stablecoin based at first. It's probably going to be Ethereum based at first. And it may actually be Ethereum based forever. I don't know. As long as we have a dollar, right, that you're going to want to pay in for that, what I call that, I keep using this phrase, ephemeral transaction, to explain what I mean. An ephemeral transaction is a transaction that happens quickly, one and done. I pay for my groceries, I pay for something, right? As long as the dollar is the basis for that ephemeral transaction, it probably makes sense for that to happen in a stable coin, because then I can stay in quote unquote the crypto world. And we need that layer two scalability in order for those payments to work for everyone. That's why I'm so excited about Visa getting into this world, because they've already laid those rails over 50 years.
Well, I often wind up the person that refused to accept Bitcoin when it was $3,000 for the purchase of my property, because it's now worth into the hundreds of millions that they could have had, and that's what drives Bitcoin adoption, is when they calculate what they would have had if they accepted the payment in Bitcoin. But really, there's a lot you can do without a bank, but I still need a bank account at the moment. So I think the missing layer here is the crypto-friendly bank, and the crypto-friendly bank will come. It's just a question of putting together models whereby you can interact. And again, I do it at the private banking level, and at the private banking level, there's lots of crypto-friendly banks. They don't like to say who they are, because it will cause problems with their clearing banks. And so half of the challenge is that there's many banks that want to work with you, but they also want to keep it a secret, so they can't market their ability to work with you. But at the same time, we're having the crypto-friendly banks being built, and Kraken becoming a bank and all sorts of stuff. So we do need the crypto-friendly bank. The reason for that is because unless everyone starts accepting stable coins, which I think is certainly something that could happen, especially when central bank digital currencies get launched. But I think the bankless world is when you have financial technology companies built on top of a central bank digital currency, with Bitcoin as an exit to the traditional financial system. Then you can do everything, but you will just accept that the fiat currency, my central bank digital currency, it is awesome for me paying my mortgage because my mortgage is priced in dollars and I don't want to take currency risk when paying my mortgage because I could end up broke or, I'm just gambling in terms of how much my mortgage is going to cost me. Every time you spend it on your Bitcoin debit card, you're creating a taxable event. Every time you're doing something with your Bitcoin, they're not treating it as a currency. And so the tax side could become the biggest challenge as more and more tax authorities recognize there's a mountain of tax collection that I can get here.
That's why I think the borrow against crypto is going to be a booming business as long as government fiat exists. It just makes so much more sense to borrow against dollars, get that 25-day loan, continually pay it back, and there's no tax implications. You continue to hold your crypto. Why would you want to sell an asset that's, like Michael Saylor says, that's gaining 200% a year when you can borrow against it?
This takes us full circle because now everyone's collateralizing their crypto in order to drive the debt-based economy because it's driving people into borrowing. But there is a critical difference. All of these loans are collateralized. They're equity-based. It's wealthy people that have savings that are looking to pull money out. And then because that's scaling down more and more and more, people are taking a tiny bit of their fractions of Bitcoin and getting loans on that. So it's really interesting because this was the peer-to-peer economy that I got excited about over a decade ago, where I thought, well, what if you could have a bank and you could have peer-to-peer loans and people could own their own money and they could decide to put it into savings products rather than the banks deciding. And we have the bank to the future vision is being created by all these companies like Abra, like Kraken, like all these other companies, plugging their both decentralized and centralized services together, and just driving this wealth effect based upon equity and collateral, which is the exact opposite of the traditional financial system, where it rewards you. The deeper in debt you go, the more irresponsible you are financially.
What's going to happen is when you can't print money anymore, you're going to have no choice but to spend this deflationary asset. And as a result, it's going to permeate its way into every aspect of everyone's life. And it's going to basically create a massive flattening of wealth over decades, which is the opposite of what happens when you're in a late stage debt cycle. I actually presented after Ray Dalio at a private conference this weekend, and he talked about the fact that we're in a late stage debt cycle, which he always does. And by the way, he said people should be buying Bitcoin now for the first time that I ever heard him say. And he also said he did. Traditionally, this does not end well. Meaning, in the 30s it didn't end well, in the 1800s it didn't end well. Meaning, the implication, of course, is it's led to war as bond markets collapse, which is what's happening now. And when the 60-40, asset allocation model is dead because bond markets are dead, it traditionally has not ended well. Okay, but we have a solution this time, right? That Austrian economists predicted would work, and it's working. But it creates over time, when you remove the inflationary assets, by default wealth redistribution, as opposed to inflationary assets that in that late stage debt cycle actually create massive wealth concentration for the rich at the expense of the middle class, which is what's happening right now.
The plumber is still thinking about how do I use Bitcoin to get more pounds, or how do I use Bitcoin to get more dollars? When the light bulb moment is how do I use, when I earn fiat currency, I'm like, well, what do I buy with that? And Bitcoin seems like the logical thing to buy with my and when it comes to selling Bitcoin, it's like, well, what do I buy with my Bitcoin? I don't want to buy dollars. I don't want to buy pounds. I would buy them if I've got a bunch of expenses. But so it is that wealth gap there that when you are living month to month, or you've got a business that's cash flow month to month, unfortunately, this is the bit that where I don't think it becomes a wealth distributor, is because most people are just trying to figure out how to pay off that credit card and how to meet their next bill, and how to meet, if they've got a business, how to meet their staff costs. But Bank to the Future our venture capitalist was Bitcoin. We never had to take on venture capital because we were fortunate enough to make enough dollars to cover our operational overhead and not have to sell that Bitcoin. And we rode it the whole way through. and it was the best venture capitalist ever.